the late great Maynard Ferguson, who I had the opportunity to see twice in concert. He was just fabulous, the boss. Look at this, y'all. What a great scalping opportunity that would have been. Everybody see what we were doing the other day with scalping? Look at this. Isn't that gorgeous? So what you saw is AD up, 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 up. Then look at this little, can you see the little wick there? Which means, AD tried to bump up and couldn't. And then look what happened at the same time. Price tried to move up and the sellers came right back in. Why is that important? Look where it happened. You looked at a period of resistance, right? So we got a line here, which is a pivot point. We've got VWAP there. So we had all kinds of resistance and it formed a little fractal. Now it did form a fractal here, saying it was reversing temporarily. So it tried it yet again, right? Tried to bump through the resistance. So that would have been a nice little scalp if you were scalping short against your existing long deltas. Very cool, right? All right, let's get into it. All right, let's see what we're doing today. So our net lick is 26, 249.10. Dang it! I was going to play the Jeffersons. We're down 78 cents. On the day when the market is down, 0.4%. That ain't bad, is it? Let's look at we didn't even look at the charts, did we? What's volume? Volume is weak, 5173. Let's look at our, what do you call the big green buster? We're fairly priced, y'all. But if you look at this, where are your eyes drawn to? I just want you to see, where are your eyes drawn to? Here, right? I mean, my eyes are naturally drawn here and here to the point of control. Now, the problem is, it's about to get a little more bullish because the point of control is about to go from here to here. Everybody see that? Where the most volume is traded. So we need price to trade around in here, a few more contracts, and point of control will move up. But even so, my eye is drawn to these scalps. And oftentimes we'll see these scalps fill as price will go down there, just try to fill those scalps. Happens more times than not. All right. What else would we do? Oh, let's look at the other, see if we're up and down. I want to play the Jeffersons for this one too. Come on, baby. We've had such a good run of late. 10, 6, 22. We are at, come on, be up. 101, 101, 817.01, baby. Well, we're moving on up. What the hell? What's wrong? What is wrong with my Jeffersons button? I will not be denied. Hold on a second. By God, we're going to play them. Come here, get my favorites up. All right, there's linear regression. Sign in. Here's where I get all my stuff at. Here we go. By God, I'll play it. Here we go.
Well, we're moving on now. We're moving on up to the side. To a deluxe apartment in the sky.
Yeah, ain't no devil gonna come in and slow me down from playing the Jeffersons when I'm made $200-something. Unbelievable. All right, so here we go. What is our theta, y'all? So we got to go back over to the count. Oh, and here's what I wanted to tell y'all. Some of y'all that are watching on YouTube, you're like, oh, I'm showing y'all my count number. Hold on. I'll get in trouble about that. Now I don't forget what I was gonna say. Oh, they will tell you, yeah, here it is. Matt was talking about yesterday. Can I do strangles and kind of do that? Yeah, you can trade whatever you want to. Basically, the metrics we use can be used in anything, y'all. Anything. It doesn't matter what you're trading, right? You can trade oil or euro or Apple. You can trade anything and you can still use these metrics. And if you don't like my metrics, make your own. But if you're a premium seller, you can, change your theta requirements 0.1 to 0.5 or whatever you want to do. I base this on what we're doing with the 111, right? We want to be between 0.1 and 0.25. So buying power, we're just using the standard Tasty Trade metrics here. And then on, my delta neutrality, I just want to be at 0.0015 times my count. Now, if you want to be a little more aggressive, you can do 0.002 times your net lick or 0.004. which are the tasty metrics. So I'm a little bit more conservative with our strategy than Tasty Trade is. But you can trade strangles or credit spreads or futures or I don't think you do crypto with the same strategy because you don't have theta and all that. You don't have options on it. But any short selling premium stuff, yeah, you can use these metrics. So, trade whatever you want to. I'm not trying to limit you. Now, Sosnoff says that they're product agnostic, which means they don't give a rip. They'll trade anything. Bitcoin, futures, stocks, options, they don't care. So some would say, I am not product indifferent because I've traded everything and I'm more comfortable focusing on something that I know. And it's easy for me to know the Fortune 500, right? Or the S&P 500. So I'm trading the S&P 500. So Tasty Trade says you need product diversification. So some would argue that I don't have product diversification. I, on the other hand, would say, of course I do. I'm trading 500 different stocks. Right? I mean, I'm trading 500 different stocks. I'm in the S&P 500. So I'm fine diversified, in my opinion. Now, some would also say, Sosnoff and Tasty Trade also says that you should have strategy diversification. That's why you need strangles and straddles and credit spreads and iron condors and all this kind of stuff. Okay, well, I think I am. I sell naked puts and I buy debit spreads. Bingo. I got two right there. Right? I've got two different strategies that I'm using. How many do I necessarily need? I don't think I need any. Now, don't let Tom Sosnoff fool y'all. I know you see him out there slinging trades and everything, and that's where y'all lose money, right? Because y'all out there will start slinging trades just like Sosnoff. The only thing that you're not doing is you're not monitoring all this stuff. Now, he monitors it. He doesn't have a spreadsheet, but he's looking at his deltas and he's looking at his theta and he's keeping it all in line. Don't let him fool you, right? He's keeping it all in line. Not to the extent that I do, but he's keeping it all in line. Yeah. So, if you're out there and you're a trade slinger, you're going to lose money unless you're keeping up with your metrics. The metrics are really important, y'all. So that's what we do here, right? We take you out of the trade management zone where you're trading every trade and I'm going to close every one at 50% profit, or if it gets to a 2x loss, and that's how you're doing. And you're finding out that you're losing money. So you come here and hopefully you're getting portfolio management techniques. So we're portfolio managers. We don't manage trades until they become problem children. Right? We're just good old portfolio managers. Just portfolio managers. Kind of like Ed said yesterday. He said, yes, this is more what, hedge fund managers do, right? They look at the forest first before they look at their little individual trees. Except for Kathy Wood. I don't know what she's doing. She's, whatever. She'll probably ultimately be successful with her fund, but she's going to take some drawdowns, my friend. So, even though Kathy could use some portfolio management techniques, wouldn't hurt the old gal, right? All right, so we got this in here. So let's look at it. My theta is, how shall I say, sufficient. Yesterday, it was not. So what did I do? I put on a naked put and I put on another trade, and all of a sudden we're fine. This is where we want to be. Now, all of a sudden you're sitting there going, well, Bobby, you fat black glass wearing nine-toed bastard, you're on track to do 20% with your 1-1-1 trades on the year. Okay. That doesn't cut it for me. I need more than that. Okay. Well, how about this, Jack? Move your theta from 0.1 to 0.2. How about that? Move your theta to 0.25. Move your buying power up from 35% to 50%. You take a more risk, you generally make a more profit. You take a more risk that you might ultimately lose large sums of money. You take too much risk, you blow out the king. So y'all seen me for what, 2.5 years now, and I ain't blowed nothing out. We just keep on going. So, you want to take a more risk to raise up your returns, do it. If you're conservative, then keep this at 0.1, maybe 0.11. And if it starts getting above that, scale back, keep it at 0.1. So there's all different kind of ways you can scale this up. Isn't this groovy? So my deltas are fine. I could have deltas of 39. Again, you might have a different delta number. Mine is 0.0015 times my net leg. You may be 0.002 times your net leg or 0.004, whatever floats your boat. Change the formula. So I don't need any adjustment delta wise. I'm using 16% buying power. I could use 35. It's saying, hey, Bob, you can take a lot more risk. Right here, I'm at the bottom threshold of my theta limit, so I'm fine. But I could be using 0.25. All right, so let's go to my little decision tree. Decision tree, market is down. Now, it says, do I make an opening trade? It tells me, yeah. It says, hey, Bob, put on an opening trade. Now, this is normally my risk tolerance, right? Your risk tolerance may be, I don't know, Bob, market ain't down enough. Or you may even say a move of 0.43 down. Let's see if we're still 0.43 down. Now we're on 0.35. So you may say it's flat. Man, that's a flat market, Bob. I wouldn't call that down. So what does your parameter say? So if I said that this was a flat market, if I considered it to be flat, it'd say, hey, Bob, don't open a new trade. You don't need to open a new trade with a market down 0.3%. Are you kidding me? All right. Now, do I close the trade? Now, y'all, as much as I want to make this, as mechanical as possible, every now and then I do have some wiggle room, right? So here, like I was talking to a gentleman yesterday, his commissions are so high, he really can't close his at 65% profit. He's got to wait till they're over, really, for him to be able to make a decent amount on the trade because his fees are too high. But my fees are very low based on the number of trades that I've done. And so, I can close them at 65% and be just fine. Now let's go look at our trades. Let's see what we got here before we decide if we're going to put stuff on and we're going to take stuff off. So let's go over here. Let's show our groups. Plus 45, plus 57, minus 4, plus 24, plus blah, blah. I don't see nothing at 65%, do y'all? No. So I could go over here now. Let's do that quickly. And go over here now and I say, I don't have one. All right, it's going to ask me another question. Hey, are you comfortable, Bob, waiting and doing nothing? Is that okay with you? And now if I said no, it would tell me to close the smallest percent loser, or I can interpolate that to close the largest percentage winner, right? Either one. Either close the smallest percentage loser or in other words, the one that's, doing the best. Get one off the thing if I was not comfortable. But you know what? I'm comfortable. So it tells me to wait and do nothing. Now, and I'm not going to put on a trade today. Well, first of all, let's look at our existing trades, right? Now, Ed is in the background going, he's wanting to scream. I can hear the man because Ed's trying to overcome some bad habits. And one of his habits is, Bobby, we got an employment report tomorrow at 7:30 or 8:30. And that might could move the market down, significantly. So he's sitting there going, I don't know, man, I'm scared. I'm gonna put nothing on today. What if the thing goes down? What if it goes up? So I don't even play that, right? That's not even in my thought process. Should it be? I don't know, maybe so. But I don't think it should be. So let's go over here, get you micros up. I don't care what they say in their little report tomorrow. Don't really care. All right, so let's look here at our little trades, right? We're going to hide simulations and we'll just look at them. Try to make it big so you can look at that beautiful trade. Oh, I've got me a little profit hump. Look at that. Isn't that gorgeous? Oh, that's on 1020. What about 10.6, Bob? Where we are today, pal. That ain't so pretty. But it will be pretty. So that's a beautiful trade. Any reason I should close that? I can be down 5% tomorrow and be just fine. All right, let's go 111.19. Oh, even more beautiful. Got protection to the downside. 111.20th. Please. 111.21st. Oh, come on. Come on, people. I can drop 5%, not even be in the top profit. 111.22nd. I'll be, hey. Looks good. Put debit spread 1. That's a hedge, y'all. I thought I put something in that one. I did, didn't I? I just managed it on separately. Okay. So we got put debit spread 1, 2 NP second. Those trades should theoretically go together. All right, look at that. I'm already up $5.75 on those naked puts. What else we got? Unallocated should be nothing. So I'll go back and think to myself, Bob, oh Bob, do you want to put a trade on? Now, here's the thing. Y'all are gonna say to you, oh, the market's down now just a measly 0.38%. It could be down 18% tomorrow. I don't care about tomorrow, I care about today. So my question is, let's go back over here. Bob, oh Bob, if you want to make them more money, you got to take a more risk. Everybody with me on that? If you want to make them more money, you got to take a more risk. So I'm at the bottom range here. I'm at the middle range here, and my deltas are fine. Now, most of you would say, well, Bob, what's the old VIX doing today? Well, go look at the VIX. We can look at VIX and see that VIX probably hadn't moved that much on the down move today. Let's see if it's going up or down. Sometime it'll go up. The VIX is going up. One. Wow, it's went up 1.07. And you say, Bobby, the market's not down there. Look at VIX, y'all, it's 29. Have y'all been watching Tasty Trade? They run this commercial every day where Liz and Jenny are in the football pads. Hi, I'm Jenny. I'm number 18, because that's the theoretical average of the VIX over the next 20 years. And I can't wait for it to get back there again. She was making that commercial when VIX was 15 or 16. She's like, man, I can't wait for VIX to get to 18. Wouldn't that be nice? Hell no, we don't want to go to 18. We want to go, we're 29, y'all. What are y'all doing being ultra conservative? Even on a down day like today, it's a beautiful time to sell premium. What the hell's wrong with y'all? So we go over here. Sorry, y'all. I feel like I'm slapping y'all around today. I don't want to do that. I'm just saying, you know, for some of y'all that are so ultra conservative, you know, what do they say? What is it? Pea in the pot? What is it they used to say? I bet Ken knows the saying. Ken, what's that saying? Something about pea in the pot or stay in the porch or. So let's go down where we'll get this thing for about $10. 10.25, we'll get home. There we go, $10, $9.75. So 34.70, 35.20. Let's pop that up to $10. Okay, we're feeling. Now, market's down a little bit. Do I want to do 111 or 112? I think, you know, normally on down days, I'll do a 111. But I think I may do 112. Get us further out in time, because again, Ed's going to be monitoring the payroll, the non-farm payroll report tomorrow. So with Ed following that, I'm going to go way down here to 29.50. Sell me two of these. 11.75. Wants to do two. All right. Wants to do two. 11.75. Let's see if we get that. I said, let's see if we get full. Place. See, Leah doing that, he's the type person that like camps out in front of Best Buy, you know, to get the Black Friday specials. Oh, I know. You gotta tell me no. All right, so let's go put that trade in over here. We got that trade in over there. Let's do it over here.
You're killing me, Bobby.
Sorry about the meeting. I was going to do a big compare and contrast with the Trader Nerd group versus Tasty Works group today. And I was like, you know, Tom Shoshnoff, billionaire, right? Sweet Bob, thousandaire. Tom Shoshnoff, he's got Tony and the research team. Sweet Bobby, my God, Ed. What's the comparison? There ain't no comparison there. I mean, Ed, you got them. I mean, I just have Ed and Tony any day. All right. So here we go. All right, what did I just do? I put on a trade. So I'm doing a 112 over here. So we're going to do the 29.50 way down here, y'all. Way down here. So I don't care if this is your strategy or not. You sell, strangle, I don't think. Just get you some metrics together. Get you some metrics. So we're doing the 29.50. And then we're doing the 35.20, 34.70. 35.20, 34.70. 35.20. We'll buy that. We're going to sell 34.70. 13.25. Let's get on. Uh-oh, it's moving. 12.75. Let's get on that. See if we can get that. Come on, baby. I should have went for the 13.25. Dag it. All right, so we got filled at 12.75. So let's go put it in our spreadsheet. All right. So I'm gonna go to the micros page. See, y'all saying, Bobby, I can't trade nothing but all the stuff you got here. Well, look, I'm telling you, if you're doing everything that you want to, you don't even need this page. You just go to the Greeks and ratios. That's all you need. Keep up with your Greeks and ratios on a daily basis. Trade anything you want to. I don't care. So we did a one lotter. We're gonna call him a 112, a 112 51st. Wow, 112 51st. I said 51st. I put my strikes in. Bobby, I ain't got time to put my strikes in. Don't put your strikes in. Hell, I don't care. 34.70, 29.50 puts. We did a 112 and 55 days out. Do y'all see why it was a good day to put on a trade? Some of y'all waiting. I got it. Y'all scared to death about some stupid report tomorrow. And I got filled at 12.75. Look at us bringing in a nice premium of 57.87. All right. So really, there's nothing else to do. Now, I mean, you know, if I'm not comfortable with my risk, I could take off a winner, and I could take off a 54% winner if I wanted to, but my theta is so low, why would I? So let's put this in the 112 51st. So we'll know where he's at tomorrow. And let's just look at that trade. Let's look at him in our thing. So 112 51st. Let's go evaluate him, shall we? So we go to the Analyze tab, and let's just see what we put on. We put on a 111 51st. There she is, just waiting for this beautiful little profit hump to come up into the little dome right here. Isn't that sweet? Look at there, 5% down move. We don't care. 12% down in the market. We don't care. 20% move down in the market. Let's see where that is. 20% move down. And we're beautiful. Now, if it happens today, we're going to be down $1,200. But if we hope, y'all, that's 20% down. That is 20% down on a trade that is perfectly safe. Wow. Ken says unemployment payroll numbers have been the media's drum since for over 40 years. They bang it for everything. Historically, it's meant next to nothing. Look at the market's other hand and the darling news hand. Huh. I don't know what the darling news hand is. But yeah, I agree with you. You know, I mean, reports come out, reports go, but you know, tell me the last report that made a difference in your life. What a difference you made in my life. What is the last report that made a difference in your life? It's like I tell my kids in my college classes. I'm like, yeah, you know, you're not going to remember anything we did 50 years from now. You know, you're so focused on your grades, some of y'all ready to jump off the building and commit suicide because you ain't got the grades you want. I said, you know, 50 years from now, this really ain't going to matter. Relax, do the best you can, have fun. Have fun. Right? And the same thing with this. Take some risk. Most y'all gonna be dead in 50 years anyway. Right? You gonna die. We all going over that threshold. Have a little fun. Take a little risk, have a little fun. But take some managed risk, right? Take some calculated risk. So I feel really good taking my 20% down move, losing $1,100 on this trade risk. Yeah, absolutely. And now we know how to defend trades. Now we're about to do something neat. Y'all don't go anywhere because we got something good coming up. Got something good. I want to show y'all something. I got some stuff to show you. All right, so we got 12.75 on that. So y'all know we're gonna do this same trade in the other account, right? But first of all, I'm gonna see how we're doing in the other account before I log at trading. So let's log our metrics over here, shall we? So if you're doing strangles and straddles or whatever you do, you can do the same thing I'm doing right here. All you gotta do is do your log your delta, your theta, and your bind. All right. So my deltas are 53.50 in this account. See how cool this is? 53.50. Y'all all that have been hanging with me, y'all should be portfolio managers for now. You don't need nobody to tell you anything that I'm telling you. You're here for the camaraderie because you bored to death. Right? Trading is a lonely business. It's fun to get together. No doubt. That's why you're here. You know what I'm gonna do. Y'all look at that. I'm at the low end, baby. VIX we know is 29. Right? Our buying power usage is how much buying power usage? 15,871. It's like I ain't even trading numbers. It's like I ain't even doing it. 15,871. I'll be ashamed of myself. I'm using 15% of my buying power. I could be using 35%. I'm at the low end on this, and I'm at 29. You know what else Sweet Bobby's gonna do? I'm gonna come over here. Market's down. Do I put on new trade list? Do I have a 65% winning trade? Now we're gonna answer. Let's go ahead and answer that. No, I'm gonna go ahead and put my trade in first. So I'm gonna go to my trade tab. And y'all, I'm gonna do what they say can't be done. I'm gonna put 2 of them on. Look at this. Because that's my normal tranche size. I gotta turn up my risk a little bit. A -2.2. So it's gonna be a 2.24. Oh, Bobby, let's get 1350. Oh, hey. Come on, baby. All right, we'll go down to 13.25. 13.25, make it less advantageous, right? Lower your credit. I feel it's going. I feel it. Hum that it. Hum that it. No. All right. Let's see if we can get 13 down. Probably have to go down to that stupid 1275, like you know. Oh, I gotta go pick up some Mr. Fields from the rec department, take it down to the concession stand. Oh, hire somebody to do it. Okay, so we got in this one at $13. 2 tranches, right? So let's go put this one in. Go to the micros tab. So Bobby, what if you don't even need this tab? If you don't keep up with trade, just keep up with your metrics. If you're gonna do one tab, do this. You don't need all this other garbage. Just do this. If this is too complicated for you, just start there. And you can do this on a napkin every day at your job, right? So we're gonna call this 112.56. 56. And the strikes are 35.20, 34.70, and 25 or 29.50. But 112. Tell me we ain't got enough strategies. I can still put on some of these bulls and bear stuff, so I want to. That's all I want to. I'm good, baby. I'm going what's working. 10, 6, 22, and I think we got $13. $13. Right? So we brought in 118.24. What's that right? 13. Now some of y'all would go and now redo your this. Don't redo it. Don't do that. You know, leave your Greeks like you were when they found you, and we'll worry about this tomorrow. Okay. Now here's what I want to show you. I want to go and look at the chart of the E-minis or the micros. They're the same chart, right? So let's go to charts. All right, so here we are. And I want to go year to date, okay? And I want you to just look at something for a sec. Y'all just stay with me. Do y'all see that kind of this? Y'all see that this little scoop down and this scoop down to here was kind of similar to this little scoop down, then a little scoop up, and then a little scoop further down. Does everybody see that? I want to make sure you see that this and this are kind of similar, but this one wasn't as prolonged and protracted, even though you got that great up move. But I want you to see that this was even further down than what happened here. Everybody see that? So what I want you to see is that you and I have progressed as traders. You and I have actually got a little better. So what was happening during this horrible time when the market was collapsing right here, which is the last time we had it collapse, right? So that was in June. That was in June. What happened to our account in June of this year? Well, let's look, shall we? Let's go to the little account. Let's go back up to June. So here's all of our trades, right? Well, let's go to our, let's not know our trades. Let's go to our, let's go to our Greeks and ratios. How did our Greeks and ratios look in June? Okay, let's go back up into June and see what we got here. So I was looking yesterday, and I want you to see what happened in June. So we got above, now back during this time, we were probably doing theta between 0.1 to 1%. So I wouldn't have flagged it as red until I went back and evaluated our account, how we were doing. But it was kind of cool, right? That we were looking back here, and I want you to look where we started getting in trouble, right? So, even back in May, we were using 63% buying power was the highest there. 63. So let's just kind of look. See how bad it got. Okay, here we go. I want you to say back on June the 16th, we got up to theta of 0.75 and buying power usage of 94%. And we were too long by 28. So you should have seen back here is that red flag should have been going off all over the place. Y'all see this? We were using 95% of our buying power. I mean, were we close to getting a margin call or something? I don't know, right? We traded through it. Time went down. Look here, few days, theta comes back into line, buying power comes back into line, and everything comes back into line. So I wanted you to see how major of a difference the last time we went through this was as compared to this time when we went through calamity and shock. Look at this time. Look at this time. So where was our big downturn here? Let's see. It starts August, but September 12th, 13th, 14th, 15th, 16th through the 20th. Let's go there. September 12th and 13th, and 15th, 16th. How are we doing? Now let's see. 0.13%, 19%. Okay, so up here in the beginning, we were at 38 and 45. Well, we were over 4 and over 7. Weren't really out of line. Look, so we changed our metrics and we started taking things a little bit more conservative. And I want you to look through those tumultuous times in the market. Oh, okay. So we got just a little bit too long here by 8. While the market was puking, y'all. The market was puking. Look at us. Look at us. Did y'all see that? Okay, so market kind of puked in through here a little bit. Okay, well, we got a little long. But look at this. Look at our buying power. This go around. Look at our theta. This go around as compared to June. That's what I wanted to show you today. This is what I wanted to show you. We were much more taking a little too much risk back in these days. And so, yeah, have our best practices changed? Yeah, we've reduced our theta a little bit, our theta guidelines. We've kept the same buying power guidelines, but in reducing our theta, we've helped our buying power. So what I did is we went and did an analysis. Ed did it too, and we went through it. And I said, Ed, am I seeing this right? And we went through it and kind of figured out, hey, let's change our metrics a little bit. And it was Ed's idea to change the theta percentage. He thought down to 0.3. After I looked at it, I go, I'm comfortable with 0.25. But if you're using an upper theta range of 0.3%, that's fine. No big deal. You're just a little different than me. I mean, choose your metrics, right? Just because I'm conservative doesn't mean that you have to be as conservative. You can open it up a little bit.
Wait, Bobby.
Yeah.
I might need you to repeat that so I can record it. Oh wait, you're recording this. I can listen to it later. I'm more aggressive than Sweet Bobby. I like that.
Yeah. Ed's more aggressive on his theta. He's got 0.3 as his upper range. Okay, that's fine. So if you want to, let your deltas be different than mine, mine's 0.015. Tasty says as long as you're between 0.002 and 0.004, you're going to be fine. So I'm a little more conservative than they are. Ed's a little more aggressive than I am on theta. I think he's using the same thing over here, but you fit the metrics to fit you. And you don't have to be doing 111s and 112s. You do strangles, anything that you're doing in the short selling range. Now, if you're a put and call buyer overall, then this is not going to work for you. This is going to be for those of us who love selling premium and developing your metrics, delta, theta, and buying power are going to help you to manage your account. Doesn't matter what you do. Doesn't matter which stocks you're trading. Put them all in a little basket, trade the high IV stuff if you want to, and control your buying power, your theta, and your delta. Isn't that cool? But I just wanted to show you how we've learned, how we've progressed. Because a lot of times you go, man, we're just sucking. Man, this market is horrible. Well, are we? Are we? Let's go over to the other camp. Okay. Let's see what happened here. Let's go back during that same time, Greeks and ratios. Okay, so in this tumultuous time, we got a little bit too long, didn't we? Now, remember, if I was using 0.004 like Tasty, that would probably be fine. But I'm, a little long. But look at this. The entire tumultuous time, look at my theta. It was never out of line. It only got low. Look at this. I mean, we're going back to all that tumultuous time in the beginning of September. Remember the horrible month of September? You see any red here at all? Do you see any red here at all on buying power? Okay, I almost got above 35%. I went to 34.7. Do you see how our metrics have improved? Do you see this? All right, let's go back to June. Let's see how bad we got here. Oh, dear Lord, yeah. We were out here. This was out of line, but even this was still okay. But look at this. I just wanted to show the difference. Okay, look at all the red that we had in April. Didn't have any March, April. We had some issues there. But, and here's the June stuff, right? Here's the June stuff. Well, it doesn't look as bad as the other account. We only got up to what, 50% usage in this account? Okay. But look how much better we're doing now. Look how much better we're doing now. Look at this. Through all this tumultuous, and y'all remember what a horrible month September was. Now, let's go over here and let's look at our realized returns. Our account is up $7,000 after commissions on 111 and 112 trades. $7,000. Now, Sweet Bobby, and I tell you this because I don't want to be on guru leaks where they show all the guru people and they say, oh, they're lying and covering stuff up. We hadn't made $7,000 in the account. We're only up 0.13% in the account over that time. Why? Because Sweet Bobby, remember, bought a SPX put debit spread that lost $400 last week. Was it last week I did that? And we were trading ES and we were doing SPX trades and we were doing butterflies, blah, 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 blah. Y'all remember all that? So yeah, if we had just done what we're recording here, we'd be at $7,000 if I hadn't done the stupid stuff. So in that exact same time frame, the market is down 16%. And we, even with the stupid stuff, we're up 0.13%. Now, had we not done the stupid stuff, where would we be? Let's see where we would be. We would be up $7,000 on, where did we start at? $7,000 on 101,688. 6,999. Where's my dang calculator? Here we go. 6,999 divided by 101,688. So if we hadn't done the dumb stuff, I did the dumb stuff. I got to take you and I'd be up 6%, 7%, while the market is down 16%. Are y'all with me? So I think, therefore I am. No, I think you and I can trade this through through bear markets. Now, here's what Ed had to bring up the other day. He's a Debbie Downer. He goes, okay, well, we're probably going to underperform the market in a bull market. I don't necessarily know about that. I'm an optimist. I believe that we might outperform the market even during bull markets. I still believe. Maybe I'm wrong. Maybe I'm wrong. We don't know yet. Maybe I'm wrong. All right, let's do one other thing. Now, do I have a trade over here? Remember, we got to go to the decisions. It says, do you got a trade over here that's 65% winner or not? Well, let's see. And then I wanted to do one more thing. 112.56. Let me make sure I put him in his group. 112.56 and show y'all one last trade. Because you know we've got one that's over. And we're going to talk about it. 112.56. Great. 112.56. All right. All right, so we got that. So everybody's in their group. So I want to go back and I want to look at something. So we've got one at 2%, 46, 24%, up 2, -2, +8, +23, -34, +57, -2, +6, plus now, well, hello, ladies. But then you got, well, hello, ladies. 211% on a down day, if the market's still down. So on a down day of 0.43%, the darn trade, y'all, is up $7.50. How can it be? Let's go look at it. Now remember, this trade ain't got but 15 days left, y'all. 15 days left, and it's up 211%. Let's go to the charts. Let's analyze it. What was it, the 21st? I mean, 1 something 21st. Here it is. Here it is. All right, behold. Y'all, this trade right now is up $350. Y'all see these numbers over here, right? It's up $350. In a matter of 15 days, this thing could be up $918. Okay. So let's say the farm number or whatever that thing is, y'all got your breath held for tomorrow. Let's say we go down 5% tomorrow. Okay, I'm gonna be down $311. But even if it hangs around that area, I'm gonna be up $918. Even on a 5% down move. So you're looking here, maybe what, a 7 or 8% down move is my break even. And you see the power of the trade. Look at the power of the trade. What has happened is this beautiful little profit hump, T0, the purple line, has now bounced its little self up, and it is wanting to expand. You're blowing a balloon up in a bottle, and it wants to expand to the size of the bottle. And look at the great theta that I got on this trade. I got 35 theta per day, $35 a day. Now, remember, I'm at the lower end of theta too, right? So if I were to take off my theta of this 35, man, I wouldn't even have enough risk on in my account to make a profit. So watch what happens to my purple line, right? And watch what happens here. Let me draw a box there. Let's draw a box. We're going to draw a box around theta. So y'all can keep an eye on that. And we're going to draw it on Vega. I want y'all to monitor theta and Vega as the days go by, because oh, does it get sweeter. What's this? Tomorrow, this went up and this went down. Let's go to the next day. So that's Friday. Well, we ain't going to be trading on Saturday and Sunday. What happens on Saturday, Sunday? It goes up again and my Vega risk goes down. Well, what the crap about Sunday when we ain't even trading? It goes up again and this goes down. Okay, what about Monday? Monday, if all things stay the same, 36.87. It went from 36.31 to 36.87. I'm fine with that. How about Tuesday? 36.87 to 37.42. Still expanding. Y'all see the feel of that? This thing's still expanding into my balloon. 37.42 expands. 37.94 it expands. 38.69 is still expanding. Vega is still going down, which is my volatility risk. 38.76. So it went from 38.34 to 38.76. Vega goes down. 38.64 to 39.66 on the 15th. 39.66 to 39.87. Look at Vega. We're in the teens now. 39.87 to 39.37, 39.68. There's where I'm closing. I'm hoping to hold this 11 more days. It's got what, 16 more days on it? I'm looking to close it at the point that theta starts, it's a diminishing return, and then my theta starts going downward. So at this point, if I go to that place and everything kind of stays the same, I've made $757 out of my 918. Now watch this. If it goes down a little bit from here, look at this, 757 to 770 to, look at there, it's going up. Y'all see that? I could go down 2 or 3% and just be fine. God, what a beautiful trade. Wow. Yeah, everybody tries to copy my metrics and expects 1,000% return on capital. Yeah. You know, and it's because you got to understand, I'm trading conservative. I'm trading more conservative than Ed on certain issues and more conservative than Tasty on most issues. What's your risk top? tolerance. Use 50% of your capital if you want to. Your drawdowns are going to be more. So here's what I hope you take from it. Trade you, baby. You want to take a more risk to make more money? Fine, open it up. You can do the same thing. Same thing I'm doing. Yeah, am I taking risk on this trade? Yeah, I'm letting this blossom. Well, Bobby Tasty says close things at 21 days. My God, you taking this down to the wire. Yep. You know why? Now look how pretty she is. Look how pretty she is. Bulls make money, bears make money, hogs get slaughtered. Okay, I got it. Bobby, what if you get run over by the, okay, I know the risk. I'm taking the risk. Ed brought up that I could close one contract. I got 3 contracts. I closed one today. I could close one. I'm taking the risk. I like my theta. I need this theta. Without this theta, right? So today is, what's this? Let's say I close it today. So the theta on this is 35. So if I were to go into my metrics and take off 35 theta, right? So 35 theta, what I'd be at 70? Okay. Y'all see why I'm leaving it on? To take it off is going to make me theta poor. My account is screaming to me, Bobby, that's not enough theta. You got to keep your theta up. And I go, oh, okay, I can do that. When y'all will get this in your head, you are going to be superstar level. I mean, really, there's not going to be a market that can take you down. Really, not going to be a market take you down. Worst case scenario, based on our current metrics that we come up with, we may have to roll out for a few months. Okay, you know, we may forego a little profits a few months because we're going to have to kick the can down the road. That's worst case. Worst case scenario. Okay, worst case scenario is you don't want the worst case scenario. Okay, do the VIX call hedge. Yeah, use 3% of your account a year to buy VIX calls, 10 delta calls. Do it. If you're scared to death of, you know, the crash, the nuclear war, the whatever, okay, buy VIX calls. Use 3% of your account per year. Do it every month, and you know your returns will go down by about 3%. Okay, big deal. If that makes you sleep at night. So I hope what you're seeing is you can tailor this to anything you're doing, any strategy, as long as it's a short premium strategy. You're selling options, right? You can use these metrics for anything. Stacy, well, this hour was filled with lots of good stuff. Thanks, Bobby. Well, thank you, Stacy. Yeah. Every now and then, right? What do they say? Blind squirrel finds a nut every now and then. So we have something good every now and then. So, you know, take this for what it is. Trade whatever strategies you want. You want to add strangle steel strategy and spreads, and you want to do DraftKings, not do it. But you still monitor your metrics, right? Isn't it funny? Tom Shoshanoff, as Beth says, you know, he slings everything out there, but what does he do? Y'all know what he does. He beta weights everything to SPY. He's doing the same thing we are. He's beta weighting the SPY. So rather than just beta weighting, I basically said, let's trade SPY. Let's trade the S&P 500. And we just do it with futures rather than SPY. We get better tax advantages. We get, what else do we get? We get span margin. We get wonderful trading hours if we need to make adjustments overnight. It's a no-brainer for me, but we all still, you know, beta weight to SPY so we can compare apples to oranges. So if you want to put a DraftKings in here, do it. And then still monitor the same thing under your metrics. Your metrics don't have to be mine. So if you're out there listening, you go, how do I change it? Or how do I do this just on a napkin? I'll show you how. It's really easy, right? So whatever your theta is, if you want your theta to be 0.001 or 0.1%, then you multiply it by 0.001 times your account value. That's all this is, right? This is 0.001 times this, right? That's all that is. So your buying power usage, that's easy. How much buying power are you using divided by your net leg, right? And that comes up to that. And then use whatever you want to. This is the tasty metrics. And then what do you want your deltas to be? Okay, Mine is 0.0015 times whatever your net leak is. Okay, so if you want to do more than that, multiply 0.002 or 0.003 or 0.004. Come up with your measure. You don't have to copy mine. All right, any questions? All right, great session, y'all. I will see y'all tomorrow.